to welcome on board Sandip Sabharwal as well. Sandip, hi, good morning. Good to be speaking with you. Well, I remember ahead of the earnings season, you were saying that it's better to wait out for the commentary and the earnings from the IT majors before dipping back in. Now has the view turned a bit? Are you a bit more positive on the IT sector, especially the large caps?
So the results in general have been better than expectation. Then subsequent to the TCS results and commentary, we've already seen the stocks have moved up substantially. Now, if Infosys now today opens at the rates indicated by the ADR, and from there, I think it's tough to build a case for a significant upside from those levels. So this was very clear that the worst is over now. In terms of what the markets have started factoring in is a significant acceleration of growth, which might not happen. So I think this is a sector today which is under-owned, and to that extent, people might buy into it. But from the current levels, whatever the levels come today, I would think that upsides could be limited.
Right. Sandeep, what about the decline in ABB yesterday? And does that present any sort of buying opportunity? In fact, not just ABB, even Siemens and the rest of the lot.
So Aisha, we could be entering into a phase of correction in markets globally, and that could also include India. So many of the high-flying stocks could give up some gains before they come to buying levels. So I think we need to be cautious at these levels. When globally markets are showing correction, we cannot be going up on a one-way speed continuously up every day. Markets have reached level where it makes sense to be cautious. Many of these companies which also have strong outlook for growth, they might also correct by 20-30% before they come to reasonable buy levels.
Sandeep, given that, it's all a function of at what price did you buy a particular stock? I mean, for those sitting on the kind of gains that they are across the board for for the entire market, other than few odd IPOs here and there, I mean, what should the strategy be? Should you be looking at profit taking at all, or just ride the wave and even the decline? Because even in a bull market, historically, we've seen those 10-15% declines coming in.
So whoever has zero cash, I think it makes sense for them to have some cash. So cash holding could range between maybe 12 to 15%. Have something on the sidelines to buy when, as and when some better levels come. For those who already have that kind of cash and have a strong portfolio, I think they can hold on because overall longer term outlook for the market doesn't change. It's not going to be the peak of the bull market. It will be a phase where after a huge run up and intense speculative activity in the market, we could see the markets give up some gains, especially in more of the high flying sectors like PSUs, defense, railway related stocks.
Reliance is the big boy which will be coming out with numbers. What do you factor in for that, Sandeep? Because that stock too has run up quite materially, and this time around O2C might not fire as much as anticipated. Any strategies around Reliance? Sandeep, you'll have to unmute yourself.
Telecom packs.
Sorry, go ahead.
So I think the current move in Reliance, what we saw, came about due to one, whatever was happening on the tariff front and anticipated hikes on the Geo side, as well as the fact that there was talks about an IPO for uh, for the telecom company. So I think those things have led to the up move. Geo financial results were decent. I think the business has still to get established. So to that extent, euphoria around that has ebbed a bit. And like you rightly said, O2C business is unlikely to do anything great. Retail overall has been subdued. So let's see what performance they come out with out there. So the general expectation is not so high this time. So if they do better than the muted expectation, then the stock could hold on. Otherwise, it could correct a bit.
50 crores?
Right.
What's the view on the manufacturing names and consumer durables now? Do you expect a bit of a slowdown with the kind of earnings that we have seen from Havells, Polycab? Because the likes of Blue Star and Voltas have done very well this year. Time to book some profits from there as well?
Yeah, so many of these stocks have already had a run up in anticipation of better results. So the results were decent, although below expectations for both the Polycab and Havells due to various reasons. Now, now it's sort of a situation where the stocks have run up, valuations are extended, but there's also an anticipation that demand will improve due to good monsoon and upcoming festival season could be good. And the budget also becomes very critical for many of the consumer names because if some tax reliefs come through and the consumer pockets get some fillip, then that would add to the overall sentiments for this sector. I think we should wait out for the budget, which is in just 2 3 days, and see what comes through, and then take a call on these stocks whether we should lighten up or continue to hold.
Well, the other bunch of stocks which have been flying high of late have been telecom ancillaries. What with the move on MTNL as well as Tata Tele, let's just bring up those stock prices up for you. For MTNL, of course, while uh, the concern in the market for MTNL was that the focus is now only into the private players, the company is broke. But now the government has managed to deposit a sum of 92 crores to pay the bond interest due. So it seems like the government interest is coming back, and that is keeping the market excited right now. The other one, of course, while Paytm continues to get warnings from SEBI over old transactions with its banking unit, Paytm by itself definitely is trying to, sort of pick its feet up and talking about as to how the new health insurance policy is going to be a game changer for them. You think, Sandeep, Paytm could be one of those disbelief to believe stories? And I mean, we've already seen some amount of recovery play out on the stock price for sure.
No, it's tough to make a case for Paytm given the fact that the core business, which was driving majority of their profits, has come under pressure. They are trying to reinvent, and that reinvention phase could be painful. It could last for a couple of years at least. So tough to build in a case to call for a turnaround, as has happened in many of the other new generation companies.
Right, okay, that's the take coming in on Paytm. Kunal?
Sandeep, what's the view on Cement Pack? Yesterday, India Cements was fairly active in the trading session. Today, of course, Ultratech, Saga Cement, etc. will be reporting numbers. Dalmia Bharat managed to surprise the street a bit. Are you turning a bit more positive on the cement space?
So cement, the performance is coming right only because of the saving on the fuel and power side. Demand conditions are subdued, pricing remains under pressure, and valuations of these stocks are not really cheap. So in that context, uh, not right now. So as the growth comes back and if they start getting some pricing power over the next few quarters, we might see opportunities. India Cements is more a M&A play now. People are buying the stock, anticipating that Ultratech will be forced to increase the open offer rate whenever because they'll have to make an open offer eventually and to take control. And I think that's driving India Cements other than rather than anything fundamental.
But Sandeep, what's the view on consumption? Because while on one hand we believe it's a good trade ahead of budget, and there's expected to be a spur as far as the consumption spends and budget focus on that is concerned. But if you look at the earnings from the likes of Shopper Stop, from the likes of Gopal Snacks, etc., there's nothing to get enthused by. So is it just start of a good cycle, and this was perhaps one of the one-off weak quarters, or how should one look at the consumption plays now?
So the anticipated recovery has started on the durable side. So if you look at durable companies' performances, the performance has been quite strong in terms of top line growth at least. On the consumer non-durable side, the recovery cycle is still starting off, and there's anticipation with inflation being under control, a normal monsoon, and possible tax breaks coming through. There could be a revival. Now, if the tax breaks do not come through, then we could see a near-term sell-off in the entire consumption pack. but directionally the improvement cycle will still play out, although albeit at a slower pace. So I think many of these stocks have had a run up. It makes sense now to wait out a bit and then take a call after that.
Fair point. Wait it out. There is no rush in this market. But Sandeep, good to have you on the show as always. We let you go on that note.
If you like this video, then like, share and subscribe to ET Now.